In one single week, the most valuable company on Earth convinced 6 of the biggest money managers on the planet to do something no one has ever done before: turn a computer chip into a $500 billion financial asset. NVIDIA just did something that sounds more like Wall Street engineering than chip making, and depending on who you ask, it's either the smartest financial move of the decade or the first crack in an AI bubble that could take the whole market down with it. By the end of this video, you'll understand exactly why analysts are calling this a $500 billion gamble on physics, geopolitics, and human faith. On August 10, 2026, NVIDIA CEO Jensen Huang stood in front of cameras and announced agreements with 6 of the largest asset managers in the world. Their goal: build a financing pipeline worth more than $500 billion, money meant to help companies that can't afford to buy NVIDIA's GPUs outright still get access to them. Huang's pitch was bold. He called NVIDIA's AI computing power an investable infrastructure asset, something that behaves less like a fast-aging laptop and more like a toll road or a piece of commercial real estate, something that keeps producing value for years. That single sentence is the entire foundation this $500 billion plan is built on. And it's a sentence the finance world has never applied to a computer chip before. Here's the mechanism. Instead of NVIDIA funding every data center itself, these 6 financial giants create independent pools of capital. Companies, from AI startups to cloud providers, borrow against the value of the GPUs themselves. The chips become the collateral. NVIDIA isn't stepping away entirely, though. Huang confirmed the company may personally backstop up to 25% of a deal, meaning if a project fails, NVIDIA eats part of the loss first. That's roughly $125 billion of skin in the game, and this isn't happening in isolation. NVIDIA has already poured close to $70 billion into companies like OpenAI, Anthropic, and CoreWeave, many of whom are also its own biggest customers. Critics call this circular financing, the supplier funding the very companies that buy its product, creating a closed loop where the same dollars seem to be moving in a circle, making growth look bigger than it might actually be. For this entire structure to work, one assumption has to hold true: that NVIDIA's chips will keep their value over time. But GPUs are not real estate. A brand new architecture can make last year's most powerful chip obsolete within 18 months. Ben Emmons, a former structured finance expert who built asset-backed loans at IndyMac before working at PIMCO, says depreciation is the single biggest danger here, and the biggest external threat is China. Huawei is mass-producing its Ascend 920C chips right now, aiming directly at NVIDIA's dominance. If China floods the global market with cheaper alternatives, the resale value of every GPU sitting as collateral inside this $500 billion structure could collapse faster than the loans backing them get paid off. Some analysts estimate default risk could push investor yield demands as high as 17%. That's the kind of number that echoes structured finance disasters from the past. Bets built on assets everyone assumed would hold their value until they didn't. Not everyone sees a bubble. Bank of America argues this deal actually reduces NVIDIA's risk, because now external investors are absorbing the exposure instead of NVIDIA's own balance sheet. S&P Global Ratings upgraded NVIDIA to AA in June, citing strong cash flow and dominant market position. Huang's counter-argument is simple. Even older NVIDIA chips still find buyers because they can be repurposed for lighter AI workloads instead of being thrown away. In his words, the chips don't die. They just move down the value chain. So here's the real question this $500 billion bet is asking. Not of NVIDIA, but of the entire global economy. Can a piece of silicon really hold its value the way a building or a highway does? Because if Wall Street is wrong about that, this won't just be NVIDIA's problem. It'll be everyone's. If you think this is genius engineering or the opening chapter of the next financial crisis, let me know in the comments. And subscribe, because we're going to be tracking exactly how this $500 billion bet plays out.